Hey guys, Stock Saturday, and it's a very green week for me compared to the market. It seems S&P and Nasdaq both up about just over 1% from the looks of it, and I'm up 5.7%. So pretty happy with that. You can probably guess which few stocks are making the difference there. But yeah, some fairly big changes as well. You may notice along the bottom here a change in one of the tabs, which I will come back to. But let's have a look at some earnings. So, Pan American Silver released their third quarter earnings. This is one I'm actually completely sold out of, which again I will get to in a minute. But yeah, they released their results. I think we'd already seen this in the production, but silver production of 5.7 million ounces of silver and gold of 244,000. So the sort of targets that they were projecting was getting towards 30 million ounces of silver a year and 1 million ounces of gold. So they still need to sort of work through some transition, I think, and sort of mine production does need to increase. They were sort of saying this is the low end of both guidance ranges, so that's not ideal. Net loss as well, all-in sustaining costs as well. Silver $18.19 with silver at sort of $24 now, so that's improving. But yeah, would ideally like to see this come down a little. Gold all-in sustaining cost 1,451, so again that's sort of a healthy amount below sort of $2,000 gold range, but yeah, would always be nice to see that a little bit lower. So they are showing a net loss. Again, this is sort of capital spending and sort of part of the merger, I think, sort of one-off costs, and sort of going forward, it should look a reasonable amount better. So balance sheet as well has changed quite considerably since their acquisition. I believe the Yamana gold assets. So calling themselves Pan American Silver, but transitioning into a much heavier gold miner, as a lot of them are. But yeah, cash is up, inventory is obviously up, PPE, which is the mines basically, has more than doubled. And then they've taken on a bit more debt as well, 180 million last Christmas, up to 700 million. But yeah, this is sort of taking on the acquisition. You've also had shares outstanding increase from 210 million shares to 364 million shares. So that's obviously you can't have those assets and mines without increase in shares outstanding. So yeah, overall, it's we need to sort of see probably a full year to see if it was worth the dilution. So I thought I'd do a bit of Chinese tech. We had Tencent last week, and we've got Beidou and Alibaba as well. Smaller positions for me, but certainly ones that I am still keeping an eye on. I like Beidou probably a little bit more than Alibaba at the moment. Just seem to be sort of a little bit more growth focused and yeah, promising basically. They're sort of in the AI space. They've launched Ernie 4.0, which is their sort of answer to ChatGPT. Sort of does different things, and yeah, it's sort of business, a little bit more business focused, and yeah, we'll sort of see how that goes. But yeah, revenues sort of not really up a huge amount, quarter on quarter 1%, but operating income, net income, and that sort of thing all up from last year quite drastically, and even up on last quarter. So yeah, profitability is returning. One of the things I think not a lot of people are paying attention to, sort of being a little bit too focused on Tesla in the sort of self-driving space, saying that they're 5 years ahead of everyone, 10 years ahead of everyone, you know, whatever they're saying. Baidu's autonomous ride-hailing service Apollo Go provided 820,000 driverless rides in the third quarter, 73% up year on year. So the total public rides have reached 4.1 million, and yeah, of that, 821,000 was just in the last quarter. So it's expanding quite a lot, and you know, this is actual robo-taxis essentially on the road. Admittedly, it is China, and maybe they want to sort of push things a little bit further than other countries maybe would before sort of getting legal and regulatory approval. But yeah, they're doing it. Good to see the main apps as well still sort of rising when they're at this scale. I mentioned WeChat last week was still sort of growing, and Beidou's apps monthly active users up 5% year on year, 663 million. So this is essentially their sort of Google equivalent in China, and yeah, that's pretty good. 5% growth when you're that big, and sort of still, you know, finding more and more ways to monetize those users is pretty strong. Their balance sheet has always looked incredibly strong as well. Sort of whether you net all of this off, or you know, a part of this off if you're doing valuations and price to earnings, you know, that's up to you. But I look at it in dollars. It's a $41 billion market cap, and they've got 4.7 billion in cash and 21 billion in short-term investments. So yeah, over 25 billion in cash and cash equivalent, over 26 billion. So that's rather a lot of the market cap, and they don't exactly have a huge amount of debt at all. You're looking at 2 billion in long-term loans, notes payable 5 billion, and not a lot of short-term debt either. So yeah, most of that is basically cash that you could net off when doing valuations. So Alibaba, as I say, has been sort of taken a bit of a hit last few weeks and last few months really, and yeah, it looks the less promising to me of them and Beidou, and certainly Tencent. Sort of figures don't look too bad, similar to Beidou and Alibaba in that you know, revenues are sort of doing quite well, up 9% year on year, profit up as well because last year was quite rough. But when you sort of come down to the split, this is where people are sort of getting a little less bullish basically. You've got the Cloud Intelligence Group up 2% year on year. So this, I believe, is partly due to restrictions of NVIDIA chips. So they're not able to sort of grow the cloud side without those chips. I believe Tencent and Beidou seem to have been able to get their hands on quite a bit more leading up to the ban. So they're saying that they're okay, but Alibaba sort of, it looks like are going to struggle. So without the cloud side growing, people are sort of less bullish when you've just got sort of the retail side and logistics and that sort of thing. That's not very of the moment, you know. AI is of the moment, so they've not been doing too well. Yeah, even if the other sort of sectors are doing reasonably well, you've got sort of various growth, but overall the sort of retail arm is up 4%, and sort of international digital commerce up 53%. So that's pretty good. That's on the retail side. Wholesale side's barely up. And yeah, sort of logistics doing reasonably well, and they sort of have a little other bets section that isn't growing at all. But yeah, overall, can't really complain. And then balance sheet wise, similar to Beidou really, they've always had a very, very strong balance sheet. Looking at US dollars, so they're a $200 billion company, and they've got cash and cash equivalents 33 billion, short-term investments 40 billion, so 73 combined on a 200 billion market cap. It's not quite as good a percentage-wise as Beidou, but still very nice. And then sort of long-term assets is always growing. and current bank borrowings 1.1 billion, so more than enough cash to settle that, and sort of long-term bank borrowings 7.5 billion and 14 billion in unsecured notes. So yeah, there's sort of 50 billion or so spare that you could sort of use part of to net off in valuations. But yeah, I think people are just not particularly bullish on China. You sort of got GDP growth coming down, and sort of the property crisis and demographic issues as well. They're sort of getting older, and they basically don't seem to have had enough kids because of the restrictions, and there's sort of too many guys, it seems. So yeah, overall, I think people are just not sort of particularly bullish on China at all. But Alibaba in particular is the sort of, it needs China itself to be sort of doing really well, whereas I think Beidou and Tencent are sort of a little more international focused. Maybe Tencent a bit more, I suppose. Beidou still obviously have the Apollo driving just in China, and sort of search is more just China. But Beidou obviously are in growth sectors, so they seem to be fine. So just looking at the news, there wasn't too much news because it's Thanksgiving week, but you had some sort of interesting bits and pieces. US existing home sales quite a bit worse than expected. Not really surprising given sort of rates where they are. Durable goods orders sort of quite a bit worse than expected, although initial jobless claims were a little bit better, so people still aren't really getting laid off in droves. And then yeah, that was sort of largely it, other than a bit of manufacturing PMIs and sort of services PMIs and things, but nothing sort of hugely to speak of there. So portfolio-wise, as I say, there have been some sort of fairly big changes. Not really in the Trading212 Invest account. That just sort of plods along. Stellantis up to $20.46. Very happy with that. It's doing far better than sort of people seem to be saying the US car industry is essentially dying. I think they're really just looking at Ford and GM sort of not doing particularly well, and maybe ignoring Stellantis a little bit. Obviously, they have a big Europe focus, which does sort of help things along, more so than Ford and GM. But yeah, so the stocks at sort of multi-year highs, and I think people just sort of tend to ignore it. They maybe throw it in the conversation, but yeah, they don't really look at the price or the valuation. But yeah, other stocks sort of doing reasonably well. TSMC sort of still hovering just under the 100, and Broadcom just under the $1,000, which sounds kind of crazy to say. Himax sort of come down a little, but nothing to worry about too much there. So the Trading212 ISA side is sort of partly combined with what was the IG ISA. So this had Pan American Silver, Cleanspark, and Atalaya Mining, basically. That was the only three, and I've been wanting to leave for quite a while. Somebody suggested in the Discord that I maybe just sell it and switch as cash, because they weren't offering in-specie transfers where you keep your stocks intact, and it didn't seem to be coming anytime soon. So I sort of took the gamble. Basically the sort of main fear was that I sort of sold Cleanspark and it sort of rocketed up as I was in cash, and that has actually happened. But what I chose to do was use all of my cash position in the Trading212 ISA, and I also sold a little bit of Stag Industrial, actually about 2/3 of my Stag Industrial, and I bought I had 2,190 shares of Cleanspark in here, and I bought 2,190 in this ISA, so then I wasn't too bothered about obviously selling out in here. And then sort of expecting Pan American and Atalaya Mining to not really move all that much in the time that I was switching. So the cash has actually now moved into my Interactive Brokers ISA, an ISA that I've held for about 9 months completely empty because I was waiting for in-specie transfers. Obviously, I moved this Cleanspark position basically into the Trading212 ISA now, and it's up sort of whatever it is, 30% this week, 40% this week, and obviously that's now looking a massive position, but it is essentially just both positions combined. It's no more shares than it was last week, it's just combined. Gold and silver sort of doing quite well as well. Coeur Mining, Equinox Gold sort of pushing upwards, Coeur Mining sort of more than the rest of them. Fortuna doing sort of holding its own as well, $3.69. That was sort of well under $3 for a little while. So yeah, this is sort of very REIT light at the moment now with Stag Industrial going, and the miners just sort of dominating the whole thing. But I'm sort of relatively happy with that at the moment. And so plans for the Interactive Brokers ISA, because there is at the moment just £20,000 in cash sitting there. It was sort of Thanksgiving holidays and work for me, and sort of bits and pieces meant for Thursday and Friday I couldn't really do a huge amount with the cash. So I'll probably be doing all of this on Monday. Whether I sort of buy back into Pan American Silver, sort of exactly the same position as I had. It's 2 or 3% above where I sold it at, but you know, fair enough. It's not sort of a huge loss in comparison. I think Atalaya Mining is sort of slightly down on the week. So yeah, overall I was sort of quite happy to make that move. I was actually paying £24 every 3 months for not using the IG ISA. If I did, then you just pay trading fees anyway. It was like £10 a share, or £10 a trade to trade US stocks. So you can't really get away from it either way. It was a mistake using them, but yeah, you get over those mistakes. So the other change I'm sort of considering is taking this opportunity to not buy into Atalaya Mining again and switch to KGHM. So I've sort of covered them before, and I may do a more sort of in-depth look at their earnings next week. And yeah, sort of thinking of making that switch really. The sort of concern with Atalaya Mining, they're a sort of relatively cheap copper miner, but they have quite a low mine life. Sort of looking at 6 years on some of their mines, and sort of the the bull case is whether they can get other mines approved or sort of extend their existing mines, whereas KGHM sort of looking at 25 years, 35 years on some of their copper mines, and that's sort of not Atalaya exclusively copper, whereas KGHM are copper and silver. They're actually the second biggest silver miner in the world. So looking at sort of 40 to 45 million ounces of silver a year, and I don't think that's sort of getting the love that it deserves, basically. So with me being extremely bullish on silver going forward, 43 million ounces is hard to pass up. So Atalaya Mining could be gone by next week and replaced with KGHM if I can sort of work the currency exchange and that sort of thing. I think I have to buy Polish zloty on Interactive Brokers. So we'll see. It could be, because I don't think I'll need to move the Cleanspark position back in here. Just keep it in Trading212. It might just be half and half, Pan American and KGHM. So we'll see. That would actually mean that I've spent the cash that I had in Trading212 basically on these 3 holdings now. But maybe not the worst thing. And just looking at the invest account, the Chinese tech has sort of barely moved, except Beidou sort of rising a little, and the options, of course, with Cleanspark doing rather well this week, and especially Coeur Mining coming up as well. These are now looking very, very healthy. So this was at just under 10,000 last week. I haven't bought anything except 3 fairly cheap Himax options for just under, well, about £75, I think. And these are now at 11,500. So, 15% in a week. Most of that coming from Coeur Mining. So you can see sort of how stark these changes can be. And I've got just under £4,000 in cash in there. Sort of partly considering not actually investing some of this. I maybe need some of this at least to pay for bills in real life. So this may not stay in cash, or it'll probably sit there as cash for a little while, but it may not ever actually get invested. We'll see. So leave your thoughts in comments below if you guys are buying anything, if you're bullish on anything, and like and subscribe. See you soon.